What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to talk about the event calendar that we have for the week ahead, and we're also going to talk about SPY and some key levels that we're watching to determine if we're going to continue the bullish or we're going to move back into a bearish trend. So let's go ahead and get started. First, let's talk about the event calendar we have for the week ahead. The most important report that we're expecting for the week ahead is going to come Wednesday, which is the CPI report, and it's expected to tell us where our inflation rate stands for June. Now remember, last month when we got the inflation report, it came in at 8.7%, which is a 40-year high. So that is something to note. Going into this month and into this week, we are expecting a little bit of a decrease in CPI because we have seen a decline in oil. Oil has gone from about $150 per barrel to $105 per barrel. So if that indeed is tracked in this report, then we are expecting a drop off from the 8.7% that we hit last month. Now remember, last week we also got some important reports, which were reports about unemployment and the job market. The labor market added 372,000 jobs, which is actually bad news. I know it sounds contradictory, however, it is bad news because the Fed want to see a drop off in the job market. They want to see a drop off in consumer spending in order for us to slow down inflation. By other words, the Fed is willing to do whatever it takes, including a higher unemployment number, in order for them to move back to their 2% inflation number. Right now we're at 8.7%. The only thing that could move us back is a slowdown in the job market and a slowdown in consumer spending. Now, another thing to pay attention to for this week, before we move on to our chart and key levels, is going to be June's retail sales report. You got to remember that a key indicator of how we're doing in terms of a recession is going to be retail sales. If people aren't spending money, that means the GDP is not going to be growing. Naturally, the economy needs stimulation, and if we don't get that stimulation, we're going to go into a negative GDP growth, which, by the way, we're expecting our GDP forecast for the second quarter at the end of July, which is something we're going to cover in future videos. Make sure you guys subscribe to our channel. If you like what you see, please give us a thumbs up. So now let's move on to the fun part of our video, and let's talk about some key levels we're watching for the week ahead. Whenever we're analyzing charts, we always like to start off with the macro picture because it tells us what's going on the longer term time frame. So we'll look at the weekly and the daily candles, and then we'll move on to the micro picture, which will tell us what's going on in the short term time frames while we're looking at the 1 minute to the 1 hour time frames. So looking at last week's weekly candle, we can see that the market did indeed move in an uptrend. It even finished the week in an uptrend, but we did not break above any key levels to suggest that we are reversing back into a bullish market. Now, what are these key levels that we're watching? When we did move into our correction territory, we broke below the 10, the 20, the 50, and the 100-day moving averages. The only moving average we did not break was the 200-day moving average, which is this dark gray line you see here on this chart. So we need to move at least back above the 10-day moving average, which is this blue line on the weekly chart, in order for us to suggest that, hey, perhaps we could be seeing a multi-week rally in the coming weeks or the coming months. Now, looking at the daily candles, we can see that we are above the 10 and the 20-day MA lines on the daily chart, which is a little bit of a shorter term time frame, suggesting that maybe there is a little bit more upside going into this week. If we maintain these levels, then we could push towards the 50-day moving average and even push to close towards 400 and finally close the gap that we formed between June 9th and June 10th. Now, looking a little bit more towards the day-to-day movement, we're going to move to the 5-day, 5-minute chart. The very first thing I want to point out here is going to be the untested range between 372 to 378. You have to remember that anytime a stock breaks out, it always needs to retest that breakout in order for it to say, yes, we are going to hold this level. Untested supports are very risky, so as long as the market is going up and it doesn't come back to fill this untested support and prove that it can hold it, that means we are at risk of selling off at any point and moving sharply back down towards this range to refill that point. So going into this week, your primary support is going to be 385.35. 385.35 is going to be that point because that is the lowest point that we reached on Friday. Anytime that we reach a low during a day, that is going to be the reversal point going into the next day. Breaking down into simple terms, that is going to be the point in which we need to hold in order for us to avoid reversing back down. If we were to break below this point, then we can potentially move ourselves down to 379 to 382, which would be our next price target. If we move below 379, then yes, we will fill the gap back down to 374 to 376, and that would be the next price target below that. But for now, we are still holding an uptrend. So as long as we are above this point, we are considered in an uptrend, and you shouldn't be playing puts for swings just yet. If you want to play puts for a swing, you have to wait for the support break in order for us to confirm that we're moving back into a bearish trend. So as long as we're holding this trend, we are expecting more upside. So going into tomorrow and the rest of the week, we need a breakout above 390 and 65 cents in order for us to move to a price target of 393 and 20 cents, which is going to be the double top that we saw on 627 and 628. Above that point, we can then rally towards 394, which is going to meet the 50-day moving average. So whenever you are looking at the shorter term time frames, make sure that you are keeping the longer term time frames in order to pay attention to any potential moving average resistance or supports along the way. So if we break above high of day, Friday's high of day going into this week, so above this point, then we can expect our next price target is going to be between 393 and 396, and potentially to fill that gap back up. So we have a very exciting for the week ahead. Options, calls can work above 390.65 for swings, and puts for bears are going to work below 385.35 for the downside play. So I hope you guys enjoyed this video. Give us a thumbs up if you did, and subscribe to the channel if you want to see more. Thank you so much for checking in, and best of luck trading.